Hello everybody, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion on the local, national, and global economy, how it impacts your personal financial health and wealth. Now here's Taking Stock, episode number 73 with Art Jarvis, and it is my pleasure once again to welcome you, Art Jarvis.
Thanks, Chuck. How are you, my friend?
I'm well, sir. How about you?
I'm fantastic. Thanks for asking.
And we have to, how's the little one? How's that little baby? I know some stuff was going on this past week real quick. But
yeah, no, he had to go do some of that baby stuff, so he was crying, mom was crying and everything. But it's, no, little Artie is doing fantastic. So he's a joy, and I'll say it again, he's a very content young man. So it's a good thing.
AJ is on the way.
AJ is on the way.
Sounds great. Well, hey, It's always good to catch up a little bit on the family too. One of those things impacting families all around us. Mm-hmm. And so we got to touch on this, and I know this isn't the main thing that's happening, but we have to touch on the oil and gas. Mm-hmm. And I was all ready to start this show today with, well, at least the gas prices are dropping. And then, well, guess what? Here we are on Tuesday noontime, and the gas prices leaped up again overnight. So, what do you say on the gas and oil?
I'm with you. I think I drove past my local gas station last night, and it was like $4.12 or something like that. And I was like, oh, we're getting close to the threes. And then, today I think I've seen $4.49 and $4.64, and so it's starting to drag on a little bit here, right? And that's not a good thing. And we still got everything going on. The oil's not moving, and then as you mentioned before we started talking here, it's we're heading into Memorial Day, and we're heading into the summer. And it's kind of magical how gas prices pop up right before Memorial Day weekend, and supply and demand. I get it, but it's the problem is as this drags on. We talked last time we talked. Now you have people actually having to make decisions, right?
Right.
If my cost putting gas in my car has gone up 25 to 40%. That's significant. And the other interesting thing is last week, we got the consumer price index, the consumer or the retail inflation number, and it was fine. It was decent. It was, nothing earth-shattering. But then we got the wholesale number, and it was way off, and it was much, much higher. So, now that's one data point. But the question is that, are we going to start to see some carryover? Are the prices starting to go up because of the additional costs and things like that? And so, and as we talked at the end of the show 2 weeks ago, it's not, we talk about gas and we talk about oil, but generally speaking, the vast majority of things we have in our life petroleum is used to make it,
right?
Things like that.
It's more than pumping gasoline into your automobile,
right? So these producer price index shot up. I think it was up over 1%, and that wasn't even close to what they were looking for. So so it's enough to give you a little bit of pause, and it's something to pay attention to. The markets have, other than the last 3 days here. The market, it's so what's going on here is a couple of things. So, there's still uncertainty going on with Iran and all that. It would be nice to wrap that up. That would help a lot. If we could get oil prices back down into below 90 into the 80s, that would help substantially. It wouldn't bother me one bit if we get back into $60 a barrel.
I was going to say, I was going to say 75 would be nice again.
Pick a number, but you're starting to see jet fuel and things like that. They're starting to have problems. So.
I'm glad you mentioned that, because one of the things, over the last couple of days you're hearing, the airline prices, airlines are increasing their prices 15 to, I'll say 10 to 15% seems to be the number. we just touched that, Memorial Day weekend. So at the pump for your car to go travel a little bit because it's Memorial Day weekend. We're heading into the summer travel times, and that you just nailed it. The airlines have said we've got to cover the cost of the jet fuel price increase. So, that's another marker, and it's going to be interesting. You always say, and I've said many, many times on Taking Stock, the consumer is still in it.
Mm-hmm.
Well, maybe summer is going to be a little bit telltale. Is the consumer going to be able to, let's say absorb the increases for what normally is our summer fun, our summer travel? And what does that do to the tourism if they don't?
Yeah.
Whoever we are.
That's a very strong point. Okay. I mean, we had COVID, and the result of COVID is people began to travel way more than they were before COVID, right? That was our reaction to COVID, right? Like now we're out of the house, we're going to get out of that, we're going to go see things, we're going to go do things. It will be curious to watch this summer whether that you start to see a bit of a damper being put on that. So yeah, that's a good point. The other thing to keep a close eye on will be retail sales and things like that.
Right. Well,
are they spending? Right. And then of course gross domestic product. So if you start to see things like that, we're not. This isn't a world. Knock on wood. This isn't a world war and things like that. But just you talk about gas prices. It's the uncertainty of the situation. Number one, has gas prices just gyrating all over the place. I mean, gas goes up 5 cents a gallon overnight. Well, okay, that's no fun. But gas goes up
25 cents,
25, 50,
40 cents,
overnight. I mean, literally, we're 18
from 425 to 465.
Yeah.
End of day yesterday, start of day today.
Yeah, exactly. So, there's a lot. Again, last 2 weeks ago, our conversation was a little more positive, but yet, we're just not out of the woods yet. That's just all there is to it. We need some kind of closure.
Well, doctor.
What's going on.
Well, doctor, how is the surgery going?
Yes, well,
we're not out of the woods yet. I heard
that's
that.
That's right.
Okay.
Talk to me in a couple of weeks. I'll let you know how it's going.
It's a long surgery.
Yeah, it's a very long surgery. So yeah.
We're 12 weeks into Iran. Just keeping track.
Yeah, and that's it's starting to get a little long in the tooth. It's like it's becoming tedious, I guess is a good word for it, that here we are in the 6 weeks from 6 weeks ago that just doesn't feel like we've made any progress whatsoever, So, and we keep getting, we're gonna bomb them like crazy, and then, I changed my mind. We're going to give them a couple more days.
The last 24 hours we had to ask. Here's the thing. I don't want to sit here and give a pass to any administration, not this administration, not the previous administrations, and at the same time, I don't want to burn them. Not this administration. Well, maybe the last one I do want to burn, but that's sorry about that. But generally speaking, here's my point. They know things at that level. Things are going across the desk in the Oval Office, beneath the eyes of the president, that we don't know about, that we don't need to know about.
Right.
But the truth is, that's what I want to know right now, because of this 12th week of Iran, and it's like I changed my mind. Well, what does he know? What do they know who are advising him? What does the administration, what information do they have that we don't know? So we can sit here and speculate and talk about that part of it, and it's a little long in the tooth. But there's, I would hate to find out at some point there really wasn't a reason. It was just some kind of BS gamesmanship.
Yeah.
There has to be something. There's intelligence, information we're not privy to, that we shouldn't be privy to, in my opinion.
Right.
And hopefully that's what's guiding the steps when it's like, I'm going to bomb the heck out of them, we're going to end this tomorrow, versus, okay, you know what, we're having talks that are meaningful. So
I mean, you just described, going into Afghanistan or wherever, or Iraq to take out Saddam Hussein.
Right.
Like, we had all this data, we had all this stuff that told us it, and then where was it? Right? In the end, where was it? And then, especially with Afghanistan, it's been 20 years in Afghanistan, and what became of that? So
let's not do that.
But that's politics, I'm going to keep, as you know, I try to focus on the numbers because we stay. But
well, we veered off long enough, so I'm going to let you get to those numbers.
Okay, and, here's the interesting thing. We talk about interest rates. Should we cut them? Should we drop? Raise them? Things like that. But it is kind of interesting here over the last just 2 or 3 weeks, really. The 30-year Treasury interest rate got above 5%. Last week it got above 5.1%, and today we're basically banging up against 5.15%. So there's some interesting dynamics going on there.
That's the 30-year.
That's the 30-year, and then the yield curve is pretty close to a normal. It's not inverted. It's pretty. If you're shorter term, the interest rates are lower. Your longer term interest rates are higher. But so that's. Especially the last 3 days, you've had this increasing interest rates. The global, not lack of desire, but decreased desire to own U.S. debt is showing up. Interesting enough, Japan, who is the biggest holder of U.S. Treasuries, U.S. debt, they dropped a little bit. They're still at like $1.4 trillion of our debt that they hold. But Japan has cut directly. Japan has cut their holdings like from 1 point something trillion down to like 600 something billion. So they've had a pretty substantial cut because it's that their currencies are getting jerked around and flying around all over the place, and they're looking to kind of cut down on some of that volatility and things like that. So, the less appealing the U.S. debt is, if the U.S. debt is bouncing around, I want to be paid more money for that volatility. Well, that means the value of the treasuries is less, which means interest rates go higher. Now, that impact of the bigger thing, we had a substantial run in technology stocks here, especially since the end of March. I mean, again, they're big drivers. Well, technology stocks are getting beat up here the last 3 or 4 days. Mm-hmm. So that's where you're seeing a lot of things being drugged down. Now, I personally don't believe that this technology run is over.
I got you.
I actually spent a lot of time late last week, early this week, looking at comparing bubbles. So you remember the .com bubble, and it's not even close. Now, granted, the numbers are a little skewed because people were making predictions that weren't even close to coming true, right?
Right.
So you look at some of the valuations and things like that, but yet still, even if you cut the 1999 valuations in half, we're still not to that point here. So I still think we have a pretty good long way to run, and we'll use the artificial intelligence term or phrase, and that still has a long way to run. So
yeah,
and there's not that level. There's not that level of people. 1999 heading into 2000. For 2 or 3 years prior to that, people were making 40, 50, 60, 70% return a year on their investments, and it was all tech driven. And then 2000 hit, and it dropped by 80%.
Right.
That's how far ahead of ourselves. We're not, I'm kind of off on a tangent here, but
understanding the comparison of the burst of the bubble versus where are we in blowing up the bubble right now and not bursting it. So, I mean, it's okay to talk about that.
But yeah,
the headline, though, right now, I mean, just listening to where we've been in the last couple of minutes here, the headline is about interest rates and tech stocks.
Right.
And the tech stocks, we're riding there pretty good, but a little change over the last 4 days, whatever.
Well, you look at a company like Rocket Labs.
Okay.
So it's a stock that is up almost 600% in the last just maybe say 13, 14 months, something like that. Okay, I hate to say it this way, but it looks like a rocket taking off. Okay,
right.
But Today it's down 10% today.
Oof.
So it's now it's given up. Okay, I made 500%, but now it's down 10. I'll still be.
You're still way ahead
tonight.
from where you were
Yeah.
10 days ago.
But those are the kind of movements we're getting. You're really starting to see some substantial profit taking because people are a little bit nervous. But here's the thing, one, they're nervous that they're going to lose their profits. So guess what? It becomes a self-fulfilling prophecy somewhat. But here, let's say they back down from where they broke out to where they got topped out, and then let's say they come down 50% from the top.
Yeah.
Okay, guess what? I call that a buying opportunity. And I think that's kind of my point is, yes, tech stocks are getting worked over right now, but I still believe they have, in definitely specific sectors, still have a long way to go. Yeah. Thank you. I'll take the buying opportunity.
So that rocket-like liftoff of the tech stocks, pun intended, but that rocket-like liftoff of the tech stocks, and if it was 500%, whatever, but now it's dropped to 10. You're not saying so now. Now it's on its way. It hit its peak, and now it's dropping a little bit. It's going to level off, but you're saying that's not the case. That it's going to continue to rise. I mean, it's just going to fluctuate a little, but it's still got a long way to go.
Yeah, it's
taking rise. I mean, if I said, hey, let's pick up some of that, rocket, you'd say, yeah, absolutely.
Yeah, maybe not today.
Well,
in the near future.
I got you.
Yeah, again, if we wake up tomorrow and the Iran thing is all taken care of and the Strait of Hormuz is opened up and everything, I probably would go back because then interest rates are going to drop, which is going to be good for tech stocks, and then that's probably my opportunity again. But it's funny how things work out. There is a thing, and I'll give away a trade secret. But generally speaking, when you have a huge move like that, generally speaking, you have a 50% drop.
Right.
So you kind of go back and cover 50% of that up move. Okay. So let's just say the stock went from 50 to 100. If it goes from 100 to 75, I would, generally speaking, minus a whole lot of other things, 75 would be not a bad entrance point. So, that it's those kind of things going on. Now, if all heck is breaking loose in the world, maybe it might be a little more than a little less than 75. But
Well, I don't know how many of our listeners are like me and into the cycling, but we're not too far off from the start of the Tour de France, about a month. Okay. And so what you were just talking about reminded me. So like the guy that gets in the lead on a stage. One of the because obviously there's 21 stages for the Tour de France. So somebody takes off, maybe a group of a few riders take off, and it's like that stock you're talking about. They jump out to a big lead, and they're brought back. The peloton, the group, the biggest portion of the riders, they kind of let them go, and then they realize, well, wait a minute, and they bring them back. So it's like bringing. So it jumped. Like you said, when you see a move like that, that's the secret of the trade that you were giving away. You see a move like that, it's going to settle back a little bit. Or in this case, in a peloton, in a bike race, they bring the leaders back. I mean, all of a sudden they got a 5-minute lead. Then it dissipates down to their, the main group's only a minute off the pace. And so they bring it back. So it's going to come back a little bit.
And that's a good example. So that. Unless you have a cyclist who is an outlier and just has a little something extra more than everybody else, right? Same with the
that was called blood doping 20 years ago.
Yeah.
But anyway.
Thank you, Mr. Anyway.
No names.
Carly Simon's boyfriend. Anyway. It's kind of the same thing. It's like, things get too far ahead. Nothing goes up all the time. Right? The markets don't go up all the time. I don't want them to go up all the time. I mean, if they want to give me 0.1% every single day for the rest of my career, I'd be okay with that. But it's not going to happen. You need things to take a breather, right? You need to get what I call the weak ones out. So the ones who, as it's dropping, they don't pay attention to the fundamentals. They're just worried about losing my profits, so I'm going to get out. So they're not in it for the right reasons. Plus, you got a whole bunch of people. Let's take Rocket Labs. It ran up 500%. Guess what? There were people buying it because it went up from 500 to almost 600%. Well, there's some very unhappy people right now that got in here, right? So, yeah,
if they got in just before it started to climb to 500.
I said
that's
to
the
you
trick.
before.
That's the trick.
Yeah.
Is being there when the blue light special is on.
If you don't know history, you're doomed to repeat it. And that's generally what happens in the markets. It's true. People get in close to the top of the mountain, and they get out close to the valley, which is the exact opposite of what you're supposed to be doing.
Well, there's a date in history coming up.
Mm-hmm.
I don't know it. I think you do. But so Warsh has been approved, and he's going to be sworn in
On Friday.
Okay. Well, I you had mentioned when we were talking before it was coming up, and I didn't really know the date. So this Friday, we'll have the new. The new head of the governance board,
mm-hmm.
But the reason I said it's a little bit of a historical date is because the outgoing guy is going to stay on the board.
Yeah, he's going to be a Fed governor instead of the Fed chairman. So basically, yeah, it'll be interesting.
So I should have done my homework on this. Is it David Warsh? What's his first name?
I think it's Kevin.
Kevin, that's right.
Yeah, I think it's Kevin.
Kevin, sorry.
I get hung up on Warsh.
Yeah.
But
Kevin Warsh is going to come in. So I wanted to bring that up, not just because, it's coming up fast. Interestingly, this Friday. But anyway, what kind of impact do you think this swearing in of the new Fed chairman will have on the numbers, in the days that follow immediately after his swearing in?
Yeah, kudos to you. That's a great question.
So, I have my moments.
You do. So, I think the immediate impact might not be that big of a deal. It's probably already priced into the market, to be honest with you. Today's Tuesday, so he's showing up 3 days.
Well, everybody knew it was coming and going to happen.
He's saying all the right things. He's talking about the autonomy of the Fed. He's talking, he should not be the yes man to Congress or the executive branch or anything like that. So he's saying all the right things. And don't forget, he was a Fed governor. So he has
been there, done that.
Yeah, 100%. So I can't remember the years that he was in there, back in the teens. So I guess that would have been Clinton. Right? No.
I love that.
Bush. I don't know. I can't remember.
Now listen, all right. So Obama came in 2008.
Was it really?
Yes.
Oh, I'm getting old.
Just for the record. So you had Obama.
Yeah.
And then somebody by the name of Trump.
Yeah, and then
followed by Biden.
Trump again. Okay, yeah.
The return of Trump.
Yeah. I didn't think
that takes us from 2008 to 26.
Yeah, that wasn't well thought out on my part.
That's okay. I didn't want to call you on the carpet on it, but I kind of laughed when the Clinton name came up.
Yeah, that was definitely back in the 90s. Yeah, ouch. Yeah, that seems like yesterday. But yeah, so hopefully he's going to do it what I consider the right way. Okay. Here's the other interesting thing.
Wait a minute, just for the record. So Art Jarvis is hopeful that Kevin Warsh will do it his way because it's what Art considers the right way. But anyway,
if he pays attention,
you're going to make that phone call, right?
If he pays attention to the numbers and does it based on the numbers, I'll be okay with that.
Okay.
But
now we've clarified what is the way that you hope to see him.
Yeah. I mean, if he's getting political pressure, that's not the right reason.
Right.
Here's the interesting thing. So we talked a little bit 2 weeks ago about him coming in, and there's definitely a 3-4 split in the Fed governors about what they think we should do. Hold steady, raise them, dump them. So, but here's the interesting.
Right.
It just here in the last last few weeks, interest rates have gone up substantially. Okay, I mean. The 30-year above 5%. The 30-year has not been above 5% for 19 years. Okay. That's how long it's been since that was back up there. So does that give him a little bit of flexibility to maybe actually come in and lower rates a little bit, which he may not have had that ability
2 months ago.
2 months ago, yeah, very good. Yeah, so that is kind of so you talk about him coming in. Hopefully, he's doing things for the right reasons, but also has what's happened here over the last few months actually given him an opportunity to maybe lower rates a little bit, right?
Yeah. Well, was it March basically when his name came to the fore?
Strongly. Yeah, his name was floating out there earlier this year, but yeah, his name he rose a little more to the top in March. So.
Well, my point is, so let's just say it was end of February, start of March. So he's had March and April, and frankly even May at this point. So he's had 3 months where he's already doing his homework.
Yeah.
He has to be. He's not just sitting there going, well, maybe I'm going to get it, maybe I'm not, but we'll see what happens on swearing in day, approval process. But so Kevin Warsh is, from what you just said, has maybe seen some things revealed that's going to give him a little flexibility that, as we just said, I'd even go back January, February were different. And that flexibility probably wasn't there. There was a lot of screaming from both sides, leave alone or raise the rates kind of thing. Or, we need to see another rate reduction. All that kind of talk was being screamed. But he's had, so in the last 3 months, I'm sure he's been watching, and what's been revealed to him from some of what you said may show him a little bit of flexibility that otherwise wasn't there.
Well, when he stepped off as a Fed governor, I'm sure he didn't just go fishing, right? Okay, so I'm sure this is stuff, whether he knew he was going to be a Fed chairman or not, that this is stuff it's his bailiwick, right? So, yeah.
Well, it's not like he wasn't following what was happening in the economy.
100%, yeah. I mean, I might not be a financial advisor tomorrow, but guess what? I'll be paying real close attention to it.
Sure.
I'm not going to, it's how we're wired, right? So, so here's the other side of a four-sided coin. But now let's go back to the producer price index. Are we, again, that was only one data point. Okay, right. Interest rates inflation is still in a reasonable spot. Okay, but if we are going to start seeing a ticking up of inflation, now does that limit his ability to lower rates? Okay, and then you want to take this thing one step further, a little further up the mountain. Is do you start to have an inflation problem, and at the same time start having a slowing economy, which would be stagflation, which is not good. Okay, that's not a good thing at all. Again, I'm not saying that's what's going to happen, but it's something to pay attention to. That could make his life very interesting for the next whatever number of years. Okay, so yeah, I don't want his job. So I'll pick on him, but I don't want his job. So
excellent. Well, he'll be a new one to pick on.
Well, yes.
Well, we got 60 seconds.
60 seconds, all right.
To wrap it up, final comments from Art Jarvis on this Taking Stock episode number 73.
Yeah,
I know one of the comments that stands true still. Stick to your plan.
Yeah.
That hasn't changed.
Yeah. Yeah, the stick to your plan is the tree trunk, right?
Absolutely.
It's steady, right? The branches coming off the tree trunk are technology has done amazingly for what period of time. Tech sector has gradually worked its way up into a much bigger portion of a portfolio than what we started with, right? There's nothing wrong with taking some profits, okay? So, get where it is, and that might be part of the thing. It's people out there actually taking some profits just to get it back to a more reasonable part of the portfolio. Not saying take it out of the portfolio, right? But go ahead and take a little profits and maybe move it to another neglected sector or something like that. So yeah, again, that's not deviating from the plan, but that's if you're into gambling, take some of your money off the table and just play with the house money.
Make some adjustments and let the house lead the way.
Yeah, 100%. So it's going to be interesting. It's always interesting. There's always something to worry about, but it will be interesting. And don't forget, we're starting to head into the summer doldrums too. So
there you have it.
Yeah.
Well, and I'm not going to make a comment about when everybody tunes in 2 weeks from today to the next episode. We're going to be talking about this because even last night when I thought, well, here's what we're going to talk about tomorrow, that changed. So what I will do is say thank you, Art Jarvis, for joining us once again, sharing your insights. Thank you, listeners, for joining in. Tell your friends. We want more of you.
Yeah, definitely.
We want more of you. Yeah. But again, this, we're drawing to a close, so thank you very much for being with us for another episode of Taking Stock.
Yeah, thank you. As always, enjoy it immensely.
It's my pleasure, and I enjoy it as well. And so for now, that is the end of Taking Stock, episode number 73. I'm Chuck Gibson. Thank you for listening.